Okay, great. I really want to express my appreciation to anyone who's still sitting in the room after 2 long days of programs. According to my clock, I have minus 2 minutes of my time slot left. So the whole thing got eaten up. So if I can impose on you, I'll do my best to keep to the appropriate time slot. But the presentation today is about the ACTUS Financial Contract Standard, which we think is something really important and valuable in the financial world, in both the legacy world, the DeFi world, and any other application. And so I'll give you a quick run through so you get some understanding of what we're talking about. Actually, let me turn on a timer here. So come on, come up. There we go. Okay, good. Anyway, basically today, the last job I had in government was heading a financial regulatory agency, and a big chunk of what I have to say today is built off of that experience. So education of a regulator, the central role of financial contracts in finance. The financial contract is the foundation of everything in finance. Third is chaos caused by the lack of a financial contract standard. Fourth, the solution to the open source is an open source royalty-free ACTUS algorithmic financial contract standard, and then some of the benefits that we get from this. Quite honestly, I was a regulator, unprepared for what I was going to find. I'm an economist by training, and if you have to open up a can of beans because you're starving, our solution is, assume you have a can opener. But what I found was, as I looked into it, was that the regulatory community was collecting a lot of data, which pretty much was dead weight loss. It was static, backwards looking, accounting based, dated by the time they got to look at it, and it gave you no insight into what could happen tomorrow when the state of the world changed. And that, I thought, should be a #1 priority of a regulator. 2008 financial crisis, our financial world came the closest we have come since the 1930s to a second Great Depression and financial collapse, and we avoided it by the skin of our teeth. After the 2008 collapse, there was a lot of regulatory reform built into both the Dodd-Frank Act as well as the regulation of various banks, and those post-reform changes make a fundamental change to regulation? Well, I would say probably not. And the best evidence of that is what happened with Silicon Valley Bank. In November of 2022, the Federal Reserve gave Silicon Valley Bank its highest rating for both the quantity and quality of its capital. 4 months later, it collapsed and was insolvent. So I would say that the problems I identified earlier in my tenure as a chair of a federal financial regulatory agency remain when that kind of thing can happen. And so we need a better paradigm for regulation, and that's how the ACTUS project got started. Spoiler alert, we started out looking for a solution to make financial regulation much more substantive, valuable, and critically speaking, forward-looking, so we would get insight into how the condition of the regulated banks would change when the state of the world changes. And in the process, we came up with a financial contract standard, which has tremendous value for the financial world in a host of applications, irrespective of whether we're talking about regulation. And so, as I said, financial contracts are central to the financial industry. What does the financial industry do? What do financial firms do? They originate financial contracts. They manage the life cycle of the financial contracts from beginning to end, arrange the payments, etc. They trade financial contracts, and they analyze financial contracts while they're holding them so they know what the condition of their businesses are. So that's central. And what we're talking about with the ACTUS standard is that we have something here that is important for every single one of these aspects of the financial world and the way they use financial contracts. There we go. So what do we know with financial contracts? How do they start out? And I think, as Tom said earlier, financial contracts are typically written by lawyers in natural language. You can't manage a portfolio or a balance sheet with a pile of paper. You have to do something with it. You have to turn them into machine-readable forms to be able to function. And there we go. While the contracts get written in words, the bank's going to pay, loan you so much, et cetera, the interest rate. At the end of the day, what you wind up with is something that looks like this, which is just our graphical representation of the cash flows associated with the contract. Some of it's accrual, some of it's actually paid out, et cetera. A bond with fixed rate interest might look like this. A mortgage with a self-amortizing cash flow schedule might look like that. And the reality is, while we have this nice written contract over here, this is pretty much what the financial world looks like. It is, you walk into any financial institutions and it is a mess. This is a wonderful model developed to represent what was going on with the data in Rabobank. It was scraped off of Rabobank's website before they decided that maybe it wasn't a good idea to leave it up there. And what you see is down here are all the different transaction processing systems that every day compute how much they're going to pay or what they're going to receive. Up above, on the next level, all the analytical levels, all the systems, risk management, liquidity, treasury management, pre-trade analysis, you name it, everything that uses the cash flow associated with their balance sheet to understand critical things within the bank. And you see all these, this rat's nest of connections here. That's the effort, mostly failed, to get the information that's in the transaction processing systems up to the analytical level up there they need to run the bank. I'm sure you've heard about data lakes, data warehouses, data marts, data swamps. The financial industry has spent billions and billions of dollars trying to address this problem without success. Why? Because you have all these functions down here dealing with the daily needs of the managing the book of business. And those daily transactions use nothing that's standardized. They refer to the same economic variable or financial variable in different words, the programming in the transaction processing system, different languages, different logic, et cetera. And so they try to solve the problem of connecting from here to there with these data warehouses, but all they did was try to sort of come up with a way of translating all the different contract terms, but they leave behind the algorithms that are necessary to run these systems and then recreate them up above again in a non-standardized way. So we have a major problem in the financial industry with regard to that. And so that's what we got. So we got to deal with it. And we start out, this is just a stylized representation of it. And the more transaction processing systems you have, the more analytical levels up there, you get this less horrible looking, but just as bad way in which information gets translated and collected from here and needed to be used up there in order to run a business. So, but the world, you shouldn't give up on these things because a financial contract is actually amenable to a standardization in a way that very few business contracts can be standardized. And the reason for it is, number one, the financial contract is just a pure exchange of cash flows. A bank loans you some money, you give them some money back according to the terms of the contract. These cash flows are just pure numbers. And if there is anything that you can easily turn into machine-readable form, it's things in numbers. Furthermore, and this is the most incredibly important observation related to the ACTUS standard, and that is the sequence of cash flows associated with the exchange of cash flows in a financial contract are in fact very limited. Despite the thousands of financial instruments out there in the market, if what you want to focus on is the contractual cash flows, we can represent those contractual cash flows with less than 3 dozen algorithms. The whole system collapses to less than 3 dozen algorithms because most of the differences in contracts are related to marketing and historical accidents and how businesses divide up their operations. And so the different sequencing or patterns of the algorithms, and they can therefore, because they're small in number, can be reasonably standardized. And so this is just, if you go to our website, this is just a representation of the different algorithms that are out there and how they're organized. Why is this? If you look at the relationship between the paper contracts, you have a bunch of different contract terms over here, and those contract terms in effect get implemented through one of our algorithms, and there we go, and that's how you get your cash flows out of it. And where the ACTUS contract fits in with analytics. Basically, you have the contract input, you have the ACTUS contract data and the algorithm. Data is the contract terms, the algorithm is basically the interpretation in algorithmic form of the cash flow business logic in the contracts. And so, and if you want to look at how ACTUS fits into the analytical system, you have here the pure ACTUS contracts that are able to generate the cash flow that is promised in the contracts. And what a financial bank likes to do is look at different risks, credit risk, market risk, behavior risk, and have it impact the contracted and obligations, the promise obligations in the contract that turns it into expected cash flow. The expected cash flow yields all the key elements associated with analytics related to liquidity, income, and value. We are right now in the process of getting the ACTUS standard recognized as an ISO standard, which has been going on for a number of years. We started out being part of the RMG, then we became liaison A status to TC 68, and now we're actually in the process of having ACTUS approve and recognize the ACTUS standard as an ISO standard. And I don't know why this is. Anyway, so what about FinTech and ACTUS? There's a lot of interest here over DLT, FinTech, and all. I think that FinTech promises a whole host of things with respect to the financial world, which is more efficiency, more transparency, more certainty, et cetera. The truth is, until now, the FinTech world has just done payments. And payments are not really finance. Payments are, at the fringes of finance. And to play a role in finance, the FinTech world is going to have to be able to provide an infrastructure and services related to long-lived multi-payment obligations. And to do that, a standard is absolutely essential. A Turing complete language allows you to plan and program anything you want. And the problem with that is every time you touch a keyboard, it's an opportunity to make a mistake. I hope everybody remembers what happened with the DAO and the Ethereum blockchain and the hard fork. I mean, basically, it came down to the fact that In a world where code is law, if you have mistakes in your code, you run into major problems. And the beauty of FinTech using the ACTUS standard is that it has a validated, tested way of defining algorithmically in the smart contract the obligations with respect to the cash flows. We're also, Tom gave a long presentation on the CDM. We're working with Tom on the CDM because the CDM, as it stands on up till now, has had no computational capability. And so we think that merging the ACTUS standard with the CDM and mapping the CDM into the ACTUS standard represents something of added value for the CDM because it adds reliable and dependable computational capability. So FinTech has great advantages, hopefully, or it holds out a great promise. But at the end of the day, the FinTech system absolutely needs to focus on doing finance with a validated, tested standard so that it can help deliver on the promise that it holds. And the ACTUS should, along with fixing problems in the legacy world, and along with fixing problems in the financial institutions that exist today in the legacy world, and along with FinTech, we think that ACTUS can make an important contribution there. Right now, there's some things you should be aware of with ACTUS. It is open source. It is royalty-free. We're giving it away. And I got to tell you, it never occurred to me giving away something of such great value would be so hard, but it's whatever. But you can check out our website to see some of our stuff. In order to expand our open source community, we have just launched a competition, and we're looking for people who are interested in participating in the competition. If you can see there, it's being hosted on the Apex platform. And you can find a link to it on our own website, or you can go directly to Apex and find it. But the key here is we're looking for entrants to submit proposals and implementations of how ACTUS can be used to solve particularly defined problems in finance. And we make available a whole host of resources within the ACTUS system in terms of Dockerized versions and that can be easily used to in the submissions to the competition. And we give examples of some areas of financial challenges where ACTUS could make a contribution, and are encouraging participants to look at those and see what appeals to them and submit a proposal. We also have a demo on the website so you can play around with ACTUS and see how cash flows change when different factors like interest rates, et cetera, change as well. And, well, where are we? There we go. Anyway, pretty close to making the 15-minute timeline. Thanks for your time and your attention, and especially thank you for sticking around at the end. The worst time slot to get is the last one of the day, and the last one just before drinks and hors d'oeuvres. So, if you want to find us, this is my email address at the foundation. If you want to learn more about ACTUS, go to the website. Don't forget about the competition, and feel free to talk up the competition with anyone you think might be interested. And I thank you, and if you can read the QR code, you can pull some stuff off of that as well. And I have to tell you, usually when you make a presentation in this country, the tradition is you tell a joke. The time slot was too short to tell a joke. Furthermore, it's very hard to tell jokes today because you're limited in what you can do. So my standard is to tell a self-deprecating economist joke, but we don't have time for that either. But thank you so much. I really appreciate your time and your interest and your attention.